Hi everyone, welcome to Quantsapp and welcome back to yet another video. In this video, we will understand about top 5 best indicators which you should know if you're an option trader. So let's start this video by understanding the first indicator, which is options open interest. So now talking about options open interest shows us where the heaviest calls and put writers are, which shows us the resistance and support levels for any FNO instrument. But whenever you're using this open interest, make sure that you look at it in a right way. So the right way of looking at options OI is very simple. You look at it from a writer's perspective. So options OI, it has buyers and sellers both, but the reason you will look at it from writer's perspective is because the stake which option writers have in the market. So option writer, he takes a big stake and he sells that option. So whenever we look at options OI, we will typically look at it from a writer's perspective. So now how do we exactly go ahead and read this indicator? So it is very simple. So let's select Nifty, then we will come to Bank Nifty as well. So now talking about Nifty, so how we will interpret or how we will read this data is, so the green color bars in the app is showing us the call open interest. The red color bars in the app are showing us the put open interest. So why this has to be our very crucial indicator is because it helps us in gauging sentiments. Okay, we can see how the OI has changed in a day and we can gauge the sentiments of the market. First thing. Second thing, whenever we talk about options open interest, so let's make note of it. So let's say open interest. Okay, first thing is highest call. You should always see where the highest call is, which will show us resistance because that is the strike price where the highest call writers are. Second thing you need to know is the highest put open interest, where the highest put is, which will show us the support. Okay, so now the moment you know the resistance and the support, you will be able to set a target and stop loss for your trade. How will you do that? It is very simple. Let's say you are bullish on Nifty, where the highest call writers are, where the immediate biggest call is, the immediate biggest call is at this level. That means what the participants are expecting, the participants who have sold so many call options over here, they're expecting that instrument might take a support, take a resistance on this level, and it might not be able to surpass it. Okay, so this is typically, this is what your target will be. Now, if you are participating on a bullish trend, okay, let's say you are participating on a bullish trade, this is where your support is, right? So market, if it gives a breakdown over here, these put writers, okay, these put writers might unwind, right? These put writers might unwind, and due to which there might be a down move happening in Nifty. So this would be your ideal target and stop loss level for your trade. So resistance is on the top. Okay, that is where you are expecting market to take a resistance and fall from there. Support is the level below which, if the market goes, we might see a continuation of a down move happening. So the first thing when you look at options, why is this? You should look at this as the sentimental indicators and typically just observe where the highest call and put condition is. So if you are participating in a trade, okay, what you want to see is, let's say you want to participate in Nifty right now, but if you see, more call writers have betted on the tip, right? So the tip has got denser in color. That means the resistance has got toughened. Okay, it has got stuff. It has got stronger. It has got strengthened. But if I would have seen that unwindings are happening, okay, on this strike, if I would have seen that a lot of call writers are moving out, what will happen then? Nifty might get an easier move on the upside, right? The doors for Nifty to move in the upwards direction will be open. So now just see what has happened over here in today in Nifty. See 18,600, put writers betted, call writers unwinded. So which gave Nifty a good bounce from the lower levels, right? So Nifty, it gave a good bounce from the lower levels. So, if you want to buy, what you want to do is, basically you want call writers to unwind, number one. Elsewhere, what you can do is you can wait for Nifty to sustain above the highest call. Then most probably you will see that these call writers, okay, all these call writers, they may unwind, and then there might be a big move. Okay, so two things: either you wait for unwinding to happen on the highest call, okay, or the heaviest call congestion, or else market to break and sustain above it, due to which there might be a big move. That is the first thing. And if you want to buy it on a dip, if you want to buy anything at a support, highest put is the level where you can try to participate. Given that that the put writers are not unwinding. So this is our first indicator, and this is how we can use. Coming to our second indicator, which is the futures built up. So talking about the futures built up, so this indicator is one of the widely used indicator, at least by our users who are using the application to identify a trend. So this thing, it will show us whether the instrument has a strength. So now let's say whenever you are participating for a bullish move, you want a lot of longs to happen. You want a lot of longs to come in the system, but you don't want a lot of shorts, right? Which means that in the rising prices, the bulls are confident that the up move might continue. Okay, so let's say Bank Nifty. So just check Bank Nifty out. So God knows how many times we have covered this in videos that Bank Nifty has a very strong strength as compared to Nifty. See, the trend is still intact. The long and long unwinding cycle is still followed, right? See, the quantum of short is very small whenever the shorts are getting built up. The OI addition is very small, but whenever there are longs happening in the system, the quantum is very big. So the second thing what you should do is, if you want, to buy, what you want is in futures built up, you want long plus long unwindings and a significant quantum of long. One or two short built up, short coverings here and there is fine, it is okay. But more, okay, net more long and long unwindings along with a significant quantum is what you want. For a short, okay, for a sell trade, what you want is short plus short covering, again with a significant quantum of shorts. So this is the thing what you will. Coming to our third indicator, which is about the implied volatility. So implied volatility has been a key factor which decides the type of trade which we might take. Okay, so implied volatility, it shares a mean reverting characteristics, right? It has a mean reverting characteristics. That means IVs, they can't sustain at the bottom, neither they can sustain at the top, right? It will, if it is at the bottom, likely is the chance it might spike up. If they are at the top, likely is the chance they might collapse, right? And one more thing about implied volatility is such that if IVs goes up, regardless what happens in the market, the call option will go up, even the put option will go up. Even if the market remains exactly where it is, and if the IVs, only the IVs go up, call and put both will go up. Even if market remains exactly where it is, and if the IVs collapse, the call and put will collapse, right? So what I will do is, I will navigate to IV chart tool in the application, which will show us the implied volatility, the day on day implied volatility, the, on what day, how much the implied volatility was. The orange color line is showing us IV, the green color line is showing us the futures price. So now if you see, it made a top, IVs made a top, they collapsed. IVs were at bottom, they spiked up. IVs were at bottom, they spiked up. Right now, where the IVs are? IVs are at bottom. So whenever IVs are at bottom, how can you identify if the IVs are at bottom? One simple thing what you need to do is just look at this yellow line. If it is at the bottom, the IVs are at the bottom. If it is at the top, the IVs are making a top. So whenever IVs are at top, at the bottom, that means you are getting lower premiums. The options are cheap. What you can do in such type of instances? You should consider options buying. You should buy options. Okay. So second thing is, or third indicator of ours is IV. So if the IV is low, okay, you will consider buy options. Okay, so which means if you are bullish, you will buy a call. If you are bearish, you will buy a put. Okay, so you will buy options. Second thing is IV is in the range. Okay, if it is in the middle range, if it is somewhere over here, this is the time you will prefer, you will convert your single legged options into spreads, or maybe you will start writing options. Okay, you will write options, but mildly, you will not do it aggressively. Okay, start of option writing. And lastly, if the IVs are at top, okay, if the IVs are at top, what you will do? You will start selling options, okay, but try to do with an hedge, okay. Try to, if you are writing options, just go ahead with an hedge. Don't sell random options, okay. So this is the thing with IVs. Now coming to the fourth indicator. The fourth indicator of ours is very simple, okay, which is OIPCR. So this indicator is, to identify tops and bottoms. You know, avoid, this indicator will help you in avoiding entering in overbought slash oversold zone. Okay, OB means overbought, OS means oversold zones. Okay, so now PCR is a mean reverting indicator. Okay, so it mean reverts. That means PCR as well. It is an indicator which will typically move along with the market. But whenever it forms a top, market will form a top. Whenever PCR forms a bottom, it will form a bottom. Right? Even the market will form a bottom. So what we need to do is we just need to come to this tool, which is OYPCRH, select Nifty or Bank Nifty, and just see the green line is showing us OYPCR, the orange line is showing us futures price. See, PCR was at 0.76, market formed a bottom, moved up higher. PCR was 1.55, top, right? Just look at the line, don't even look at the magic numbers, just look at the line. It is at the top, market formed a top, market corrected a bit, right? So whenever PCR is at bottom, right, you will find an opportunity to buy, right? If it is an let's say bullish trend, okay, what you will do if the PCR goes at the top, you will wait for a temporary dip to happen in the market. So let's say if you are placed on this day, what you will do, you will let the market take a healthy correction, and then you will try to participate on the upside. On the bottom, it is very simple. If PCRS is at the bottom, that means market is entering an oversold zone already. The market has formed a bottom. That is the time where you should realize that, okay, you should look out for a buying opportunity. Okay, maybe, okay, or else, let's say you are already riding a trend. Okay, let's say you are already riding a trend. PCR makes a top. It is time to book your profits. Just hit the brakes on that aggression. You're selling, okay, you are consistently selling Nifty, PCR makes a bottom. That is the time you just exit your shorts. Try to book your profit. Okay, try to get out of shorts. You buy more, whether you create a fresh buy, that is completely a different story altogether. But at least you will exit your positions whenever the PCR forms a top or bottom. On the bottom, it is very simple. This is the level 0.69 के आसपास, 6967 is where PCR is forming a low. Recent lows are being seen around 0.75. So observe where the recent lows are getting formed, and that is where you should consider that levels as threshold. Recently 0.7 is the level where typically PCR takes a support, PCR forms a bottom. Recently top was being formed somewhere around this level, so the level is 1.5. okay, so 1.5 is the level where on the top PCR recently has formed a top. So whenever market goes around this level, PCR goes around this level, you know what to do. Last thing is, you all might be knowing it, but still you don't use it, liquidity. Whenever you are trading in options, specifically stock options, always check if the stock options are liquid. Okay, one of the ways of doing it is the liquidity finder tool in the application. Over here, the tool will show us, it will rank basically whether the call options are liquid, whether the put options are liquid. So in About India, call is not liquid, but put option is decently liquid, right? So you can basically filter it out as well. Let's say if you want to trade on call, you can sort it down, filter by call. So wherever the highest liquidity is, that will be ranked as first. Filter by minimum stars. So let's say you only want to see all those stocks wherein the liquidity is at least 5 stars, you can go ahead and do it, right? So that is the case. So yes, folks, these are few indicators what you can use. Okay, and if you don't get any liquidity, don't trade if there is no liquidity. So yes, folks, that was it from my side. I hope this thing helps, and anything else apart from this, you can just drop us a mail, or I would say you can drop us a comment so that we can reply it to you over there. And apart from that, thank you so much for joining me up till here, and hit the subscribe button, do hit the like button, and see you all in the next video. Bye bye, take care, and happy